Hello everyone, I'm Stavros Tousios, Forex market specialist for FXPRIMUS. Last week, Fed hiked interest rates to 1.75%, a widely expected move which was found to be somewhat priced in considering directional activity on dollar. US markets were hit as US President Trump imposed wide-ranging tariffs of up to 60 billion of imports from China, and also due to his announcement to replace John Bolton, his current national security advisor, another political mess just hours before the US government shutdown deadline. While Fed rate hikes remain on path, this week focus is likely to remain on the slowly fought trade war and global macro and market themes as we enter a light pre-holiday economic calendar. Here are the market movers for this week. Monday 26th, German BUPA president and key FOMC members speak during Quiet Monday. A rather quiet tone on the economic calendar today. However, on the political territory, markets expect German BUPA President Waitman's speech titled New Momentum for Europe. FOMC members Dudley, Mester and Quarles will most likely set the tone for today's session, as they are also required to deliver speeches that are likely to provide investors with clues for intraday trading. Tuesday 27th, US consumer confidence widely anticipated as business conditions, employment and income improved. On Tuesday, despite some medium-impact economic indicators are due in Europe, market participants will most likely shift their focus on the CB Consumer Confidence Report, as expectations have now improved considering the recent boost amid a strong jobs market. Wednesday 28th. Economists expect an upward revision and a 17-year high on fourth quarter US GDP. This week's highlight on the economic indicators seen for the US currency is Tuesday's Consumer Confidence Index by the Conference Board. Market players are looking forward to some upside momentum on dollar-related pairs, as economists expect a small upward revision while the spring arrives. Focus will then move to oil traders as EIA report influences the price of petroleum products, which affects inflation. Thursday 29th, PCE and Canadian GDP likely to inspire the dollar. Calendar is full of economic events. Investors will dive into opportunities early in the London session on Thursday, as Germany will release its preliminary CPI data and the UK its own current account and GDP numbers. In Canada, we will get a look at how the GDP is shaping following a less than expected growth in Q4 last year. In the US, the personal consumption expenditures, the unemployment claims, the Chicago PMI and the University of Michigan Consumer Sentiment Report could place renewed pressure on dollar. Friday 30th, Japanese industrial production declined in February. Markets expect elevated figures on Friday. The closing of the week will provide investors with little opportunities, as the market will be fairly quiet on the economic front. The one event that could provide some directional activity is the Japanese industrial production, a monthly output measure that has been very unpredictable, while business investment appreciated 6 out of the 7 past quarters.